Good evening, and yes, to some of your dismay, I'm back. To others, I do appreciate so many of you writing, get better, feel better. You know, I am a guy that it's hard to put down, and this put me down. I had a serious operation on my back. I'm standing, which I didn't think I would be. I was trying to figure out how I do these shows sitting down. So it hurts, but I'll get through it. And today is Monday, the 27th of October, 2025. Now, we do have economic data coming out tomorrow. You're going to have the Redbook retail sales. They've been coming in for a change, 6% or under. For a while there, they were over 6%. Now everything's starting to slip back a little. The Case-Shiller 20 metro home price areas for August. It seems so long ago, August. But they're looking for that to come in. The July prices were up 1.8% year over year, but they were down on a monthly basis, 0.29% month over month. The Richmond Fed, they'll update their monthly manufacturing sector index for October at 9. The September reading was a negative 17. The Conference Board will come out with their consumer confidence index. The last reading in October was 94. We'll see what they come up with now. Should be pretty close to that. While I was gone, as you know, we have watched wars of words. We have Congress that is still absolutely, they can't get anything done. The two sides can't even get to the point where they can get to a temporary agreement to get troops paid and get offices open and get U.S. data out that we need. I mean, if you think either side's a winner in this, I think you're sadly mistaken. Both are losers. Both are losing from my point of view, what they're there to do, which is serve us. And if you think this is serving us, it isn't. I think the Democrats are wrong, thinking they're going to get all this money paid for immigrants here who aren't legal. That isn't going to happen. And I think the Republicans have to also be very wary of how far they push all this. What are they going to do for these people? Where's that going? So I look for this to change. What did happen is you had a vertical price move in the metals. You know that. The market looked at it and said government shut down, U.S.-China relations falling apart. U.S. seems every moment to now be attacking Venezuela wherever it can, not talking at first to Brazil, then the U.S. hitting Russia with the sanctions on its oil. Well, everything comes, goes, gets worse, gets better. Gold is down 10% from its peak. It went up to 4,400. It's back to the 4,000 level. The stock market's not stopping. As long as the earnings on the AI companies continue, as long as the spending continues, it will support higher and higher PE numbers. The problem is you will get to the point where you'll stall at some point, and that's where the correction will come in. Do I think this market's going to fall apart? Nope. Do I expect that the stock market's going to be strong? Yep. Do I think that there's new highs coming again? Yep, I do. On the energy markets, don't fall into the trap, oh, the market's up because Russian oil, they're barred from selling it, so to speak. That oil has to come from somewhere else. So for the moment, people will buy the OPEC oil, the U.S. oil, and they'll try to avoid what they can in the Russian oil. But sooner or later, oil will come back on the market. Remember, OPEC has already said, and they've increased quotas. This has given them the reason to go after it and to hurt Russia's market share. And what happens with Russia now is pretty simple. Now it's the financial part to break their economy, to create inflation that gets out of control, so that Russia comes to the table and in a meaningful way ends this war with Ukraine. I don't know who's the winner, who's the loser, what the land's going to be, but finances at the end of the day will do the job if you threaten to cut off the SWIFT system, if you can get Europe to no longer buy the oil. There's a big meeting coming up between Hungary, going to be talking with our president and others, because they're still buying Russian oil, natural gas. This got to come to an end. And when it comes to an end and other sources are found and Russia's out there by itself, that is the moment that this can end. You're not going to end it on the battlefield. You're going to end it on the financial field. That's what I think is really going to go on. So let's take a look and just get a feel for what's happening here. On the stock market, you're up for the week 1.2% at an all-time high. Doesn't feel like it, but that's where you're at. The market is continuing to stay strong. It consolidated. This is past tense now. While I was gone for that 10-day period, you had your consolidation. You're now springboarding to the upside. You've got the pattern of higher lows, higher highs, which is bullish. You've got the higher highs, higher lows over the 18-day average. And if you don't agree with me, that's fine. But this market fought for nearly 2 weeks at that number trying to figure out what to do and resolved it by saying, I'm going higher. Where's it now? It's at the resistance of the Bollinger Band. You only stay over Bollinger Bands 5% of the time. What's on the agenda that can make this just springboard? Well, the only thing I can think of is some phenomenal deal with China happens that none of us see. I don't expect that. I expect a deal. I expect a toning down of this constant negative rhetoric that we start and then they respond to. I really believe that that is the case. You don't have to agree with me, but it seems we're always attacking something. Pull back, get the job done, where now we start getting along. We've already proven how we can hurt each other. And we can do a lot of damage to each other, and that accomplishes nothing. But that would be it. You already know the market believes that you're going to have the quarter-point hike, and we'll see if you get another one in December. You're overbought, not embedded. So I'll stay with what I say. I'm not bearish, but do I think that this is where you springboard and just keep going forever up? No. You came out of the sideways action, as you can see in the NASDAQ. You consolidated here for a while. You're moving back up. You'd have to get underneath all this, and you'd have to come back under all this in order to say, oh, these markets, they've peaked out. I'm not expecting to say that to you anytime soon. The Dow has gotten up to the Bollinger Band, should be the resistance point, like the other indices, higher highs, higher lows. Same thing going on right here. When we come to the DAX, we have a higher high, but all we've done is gone back to the 18-day average and fighting the resistance. It's as though the world's waiting for the U.S. to catch up to some of these other indices, and then in unison, things can move. When we take a look at the 10-year note, you have fallen. You're not losing rate right now. You're adding back some yield. And that's come down right into the face of the Fed meeting that begins tomorrow and culminates on Wednesday. Same thing in the 2-year note. In the dollar, you had your big rally. You had the news of all the bad. Now things are getting better. And as they get better, I wouldn't be surprised if we just fight a battle at that 18-day average for a while. The euro is trying to come up a little bit. I would say if it rallies much, anywhere between this 117.41 to 117.70 is your resistance. But I look for this area right here going into this whole week where you get the FOMC, you get these meetings between the U.S. and China. A difficult time to be a hero in the market. The Aussie is trying for the first time in a while to stay over the 100-day average in the 18. That gives it more bullishness than bearish, but the risk isn't small. You'd have to get back underneath if you're going to have a stop here around the 64.83 level. That's $800 away. I don't think it's worth that kind of risk. In Bitcoin, we've had the huge decline. It happened. It's past tense. Now the market has absorbed it. It's trying to come back to life. It's fighting a battle right where it should at the 100-day average and the 18-day average of closes. Sorry about that. In the Brent, look for resistance right up here. I'm going to repeat. The people that are buying now and buying this, I understand that they've lost the Russian oil for the time being. I mean, any country that's going to buy it, they're going to get Trump's wrath. So you don't need that. You want to make the peace. They back away, and at the end of the day, they have cover. They want this war in Ukraine to end. Who doesn't want it to end? And if this is the way it's got to get done, this is the way it gets done. But This allows OPEC to produce more. They do have capacity to do so. And if we go up too much, well, then our producers can start producing. We're no longer at the $54, $55 range. You're now pushing the crude back into 61. That's not going to turn the U.S. spigots on in a big way, but it's enough to get the market maybe into the resistance up here of these higher numbers. Heating oil, natural gas. I told you these are the two markets you don't want to be short. The first part is the weather drops. You start getting your demand, the markets overreact. Same thing here. So you're seeing how it's all developing right now against the 18-day average of closes. You're a bit close to being overbought, not quite there, but these are the two markets I wouldn't be a hero and try to push. So I'm Ira. I'm thrilled to be back. I don't know that tonight I'm going to be able to do a spider ETF as I'm talking. My back is hurting me, but why push it? Tomorrow I'll be able to do 3 of these and get them done in a different way for you. So